TSMC chip production has been temporarily halted after a 7.4 magnitude earthquake hit Taiwan a couple days ago, the strongest in 25 years. Apparently, they are still assessing the impact to operations, so no word yet on when full-scale production will resume. For those who don't know, TSMC is the main contract chip maker for Apple and NVIDIA, so this could impact their supply chain in the short term as well. And what this means for TSM stock, well, TSMC's management is still maintaining their 2024 revenue projections, so this event is likely to have minimal impact on the overall production over the course of the year. TSM stock is currently trading at 141.73 and is almost fully recovered from the drop of the news of the quake. Their PE ratio is 28 compared to the industry average of 34, so there is some room for valuation growth. Their debt to equity is very good at 27%. They have also beat all four of their last earnings estimates by an average of 148%, thanks to a huge EPS beat in March of last year. Their TTM EPS is 518, and their projected EPS for December 2025 is 762, and that's going to be a 47% increase, which would translate to a $208 share price by 2026. Currently, though, their annualized EPS growth is about 24% compounded, and using this growth rate, I've calculated that we can expect to see a stock price of $216 by the end of 2025 or beginning of 2026, with the possibility of that being higher if the valuation rises closer to that industry average. So even given the recent news, the fact that management is not adjusting their projections should give investors confidence that they'll be able to maintain their annual growth rate. And that combined with their good fundamentals means that investors looking to pick up shares today should expect to see some pretty good returns going into 2026.